So you've got the good news that you're about to become an attending and your income and your paycheck is about to change. So congratulations. But the other thing that's about to change is your taxes. So I'm Ben Martinek with Bona Fide Finance, and we want to talk a little bit about income taxes and what are some of the things that can be doing in the first year of being an attending. So in your situation, you've been making less money as a resident, and you're well aware of this. The good news of less income is that you pay only less income taxes. But when you bump up into that role of an attending, you're now seeing a rather substantial increase in your income, maybe 2, 3, 4 times what you're making as a resident, perhaps even more, especially if you're in a dual physician household and both of you are transitioning from residency or fellowship into that of attending. You're going to see a huge increase in your income. And so you have to get adjusted to a new baseline normal for your taxes. And so what perhaps cut it previously for tax withholding, as an example, is no longer going to be sufficient. So where's one way in which we can get surprised in that first year? It's particularly related to any bonuses, sign-on bonuses that may be coming due or available, or could just simply be the transition itself from the low income to the high income, because in the lower income arrangement, you're having taxes withheld just on that income alone. And we have a progressive tax system in which you pay more and more in tax for every dollar you earn as your income goes up. And so the withholding on that lower income may not have been enough in light of the higher income that's coming into play now. And, on that progressive arrangement, it's per dollar, each dollar is getting taxed more. Well, it wasn't taxed very much on the lower because it wasn't necessarily anticipating the higher income. So that can be one surprise, is just the transition itself. But in particular, if you have a large bonus being paid out to you for now starting your new work, your new career, or I should say your new employment, you may not have enough withholding taking place. And that in itself may not immediately cause problems, but when you go to file your taxes, you're going to be surprised, be like, oh my gosh, we've always gotten a refund. And, my tax professional seemingly knew what they were doing. And it isn't anything about the tax professional, it's that you didn't have enough withholding taking place. And so this would be an opportunity to have a tax projection done, just to make sure that there aren't any surprises and you're ready to make potentially what could be tens of thousands of dollars of a tax payment. That's one detail that's in place. If maybe you're relocating as part of this change from residency to attending, there may be changes in state taxes or locality taxes. And so that whole change in residence can be problematic, especially in ending income with one point of residence and beginning income again. There can be some tax planning advantages associated with minimally being aware of what's taking place, but maybe being thoughtful as to what income we attach to one state versus income attached to another state. Other items that are in play is that you have maybe the net investment income tax or the Medicare surtax, going back to that higher income level, where if your household income is now getting to be in excess of $200,000, taxes that weren't in play are now coming into play, because they come into play once household income is above $200,000 or $250,000, depending on whether or not you're filing as single or married filing jointly or separately as well. And so these are additional levels of taxes on your investment accounts. But one thing that we're thinking about, if we're wanting to consider strategies that you should be pursuing, would be whether or not a Roth conversion takes place. If you have any pre-tax money held away and you had made some pre-tax contributions, if your income is still relatively low, maybe we want to have that money get taxed. And so we could be thinking through that detail. Or perhaps you've recently received an inherited IRAs. Someone passed away and left this money to you. So my condolences for their passing. But the upside to this is we have maybe some taxable money here, but we're waiting to have it get taxable. Maybe now, again, this is a good time to have that income be taxed, rather than delaying and waiting until we have the higher physician attending salary. So these are a few considerations for you. And quite frankly, this can get to be a little complicated. And so if you're just looking for assured guidance as to what is it that we ought to be doing, why don't you consider reaching out to me and my team and having us walk you through it, so you can have the peace of mind knowing that this is all being handled correctly. Trust the professionals, and this is what we do for a living. So reach out to us and give us a call. Best means to schedule an introductory call would be to email hello@bonafidefinance.com.